Alrighty, folks, this week we have more evidence that rates matter. 8% rate stops the housing market, stops the mortgage market. We didn't get a collapse to 7.4 and demand goes up. So I thought I would ask Matt, the mortgage guy, where is his broken crystal ball? Where does he think rates will go? And we'll do kind of upper and lower bounds because we have been so wrong on rates for so long that we might as well do a range on rates because we suck at calling mortgage rates. Matt, how you doing?
I'm doing pretty good, Mike. How you doing?
I'm doing great, but I think we talked about last year that you and I thought rates would end the year at 6%. Here's a hint. We are clearly wrong and we need to own that. We need to own that. So what
did not nail it, t-shirt.
Did not nail it. Swing and a miss, swing and a miss. But when we look out over 2024, which will be here in a minute, I think it's fair to say that most people see at least a short and shallow recession. Most people see unemployment rate going up. Most people see an earnings recession in the stock market. Where do you think rates are by the summer and then maybe by the end of the year? And let's give a range because we were so wrong last time.
All right. This is the beauty of it. A couple of guys who don't mind if they're wrong, just giving a prediction of here's where I think they're going to be. And last week was evidence that if inflation goes down, if unemployment goes up, if the economy suffers, that translates to lower mortgage interest rates. And it was rather dramatic last week, even though, quite honestly, the inflation numbers and unemployment being like 0.1% above expectation, those numbers weren't dramatic. But I think that, my guess, and this is going to be my first call, is that we've seen peak interest rates.
Oh, I agree.
Yeah. I don't think we go back above 8. And if we continue to see the economic data that we're seeing, inflation down, unemployment up, the economy sputtering, then the Fed has already talked about, and there's already kind of baked in 4 rate cuts for 2024. I think in one of your videos, I might have predicted 5 just because I wanted to.
You did. You predicted 5. I'm like, whoa, where'd that come from? That's a mortgage guy right there.
Yeah, exactly. Yeah, I'm always an optimist.
Team buyer.
And so I'm in the place, Mike, where I'm rooting for rates to come down, but I'm also aware that too much too fast kills the housing market because it spikes demand and it creates a bunch of competition and pushes home prices up, which I don't want. Most buyers, if they really think about it, they don't want that either. So end of Q2, so we'll call it mid-year. And funny conversations I've had lately too is like, wouldn't it be nice if the economy's sputtering and interest rates come down and it gives a lift, and then these politicians get to say, "Look what I did." Like, that's a real thing. Probably is that like in an election year, you might see some stuff happen in the economy that people can point to and go, "I had a part in that." But with all that aside, we'll call rates in November of 2023 7.5, and it's good to go off of this nationwide average. Mortgage News Daily, I like that as kind of the barometer. I think end of that time 6.75 to 7%.
Okay, so that's June. So high 6s in the summer. What do you got for the end of the year?
6.25 to 6.5.
Okay, so it's really interesting. So we see it fairly similar, and I'll split hairs just so we're different. I too think we've hit peak rates. I called that the day after they cracked below 7, so I have receipts for that. I think by summertime next year, we're kind of 6.75 to 7. Is that where you were, or were you lower than that?
I was 6.75 to 7. Yeah.
Yeah. I just think 6.9, right? If I were to pick a number, 6.9, and I'll go 6.5 to 6.75. So a little bit higher by the end of the year, right? I think the average will be 6.5, by the end of next year. So, but let me be clear. I think if we get anything with a 5 handle, even 5.99, that's a problem. Anytime next year.
Right.
Anytime. There's so much. So I've talked about the housing market being broken for a while now. I actually have changed it to today. The housing market's constipated. It's just all stuck. All that demand is stuck because 8% is bad. And if we unlocked something enough, I mean, just look at 7.4. 7.4 was enough to increase demand. That's nuts to me.
Yeah.
If we go sub 7 too fast, it could get pretty wild. So folks, do us a favor. Guess what the rates will be June 30th and December 31st, 2024. We want to hear from you. Feel free to give a range. I know there's some people that are calling for 10% rates. I see that sometimes in my notes. So some of you think rates are going up and that peak rates have not come in. We'd love to hear from you. Matt, closing thoughts, wrap it up.
Closing thoughts. Go to greatmortgagebroker.com, connect me and the team. We're happy to help. And if somebody asked me, and this was a question I was posed to me, like if I could control it, which you can't, I can't, it's going to go up, down, sideways, and rates are going to do their thing. I would basically take the end of this year at 7.5, and I would take a pin and put it in the wall there, and I would put 6% for June 30th, 25, and have an 18-month period where we went from 7.5 to 6% at a slow and steady pace.
Oh yeah.
Nothing dramatic that's going to inject demand that we quite honestly don't need, but just slow and steady, 7.5 to 6% over an 18-month period. Whether or not that happens, time will tell, but that would be good, because over time, that's going to help affordability for consumers, but it's not going to be so dramatic that it pushes up prices and then just has more of a detrimental effect than it does a positive one on people trying to get in and buy a house. So greatmortgagebroker.com.
Folks, again, remember, if you're being pitched to do a cash out refi and you're just not sure it's right for you, greatmortgagebroker.com or Matt at mtmg.com. He's promised to look at those, because if we really have 31% of people doing cash out refis today's mortgage market, it feels to me as an outsider that there are some bad actors, and maybe a home equity line is the right answer. Matt, you're amazing. Take care.
All right. Thanks, Mike.